Hi, I'm Michael Newrock, and welcome to the Trade Grinder. The Trade Grinder could help you with your enhanced use of the Trend Profiteer trading system by incorporating it into your trading. So again, a bit of theory here to keep aware of when you're trading with the Trend Profiteer system. Being a trade grinder enables you to adapt to market conditions by continually calibrating your trades, giving yourself the opportunity to catch big moves whenever they occur. By fine tuning your entry position with the trade grinder calibration process, you place yourself in a position where you can get multiple bites at the apple. Obviously, we'll take a look at a few examples in this lesson. If you want to make sure that you catch the big moves, then you need to use the trade grinder process for maximum gains. Once you start incorporating trade grinding into your trading, you can start exploiting these moves even when you experience losing trades because you're using the power of calibration with the probabilities of catching the trend. So, how can you take advantage of trends most effectively? Entering a trade and then not entering another trade if the first trade fails, or entering a trade in a calibrated position if the first trade fails. Trade grinding is achieved by entering a new trade after the first trade fails or closes at a better price or at a new strong setup. In other words, if at first you don't succeed, try and try again. Just because you take one trade and it fails, or even two trades and they fail, doesn't mean the theory of the intended direction that you're looking at is not going to eventuate. More often than not, it does. It just wasn't perhaps the right particular time. So let's take a look at a example. Here you can see a small loser to the downside. You can see small winner to the upside here. In fact, you could have got in a little sooner than that for around the same net result. Small winner to the downside. So none of them real big, just two small winners at best and a small loser or a break even at the very best. And then you get a big winner. So the point is small loser, small winner, boom, big winner. Now, you need to be in it to win it. So if you're not getting back into the trade, then you may miss out on those the setup that's going to you know take that take that pair a long distance and generate a lot of pips. So you need to always be fine tuning, calibrating your positions to catch the next big winner. Trade grinding is all about calibration. When trading the overall trend, it's important to accept that not all trades go as intended, and this is not necessarily because the trade direction chosen wasn't correct. Often it's more of a case that some calibration was needed. If the Profiteer higher time frame analysis suggests a strong unidirectional position, say four directional arrows pointing in your direction, say long buy market, and you enter a long buy trade and it fails, the important action you should consider taking is calibrating your trade position. The position may be strong and the theory correct with all indicators showing positive results in line with your position. However, the level may not be quite right, or there may have been a news related event that the market reacted to, or the market could be going through a natural correction as part of its continuation of the trend that you are positioned in, or a new level may need to be tested first, or pretty much anything else that could affect the position may have happened. Doesn't mean that the market isn't going to go in your direction. Calibrating your position simply means to fine-tune your entry position for the right price and the right time. If the direction moved against you, first of all, you want to let the market correction fully unwind before considering to move back into the market with a new position in a new trade setup. So, in other words, let the dust settle, let the move unravel itself, wait for another good trade setup. At times, the market will move back in the direction you're anticipating quite quickly. However, in many cases, the market will move further than you expect before the market continues its move in the overall intended direction. Often, this is due to a general cleanup with stop loss hunting as market makers push the market in the reverse direction to provide themselves with better opportunities to take positions in the expected overall price direction. In other words, either the market price is pushed down to create better buying opportunities, or the market price is pushed up to create better selling opportunities. And that is what you want to wait for. That is what you want to get in. So there's never a guarantee of generating a winning result when you enter a trade, but you can take steps to get back into the market once the market is settled and you've got a new trade set up in line with the overall direction. So therefore, when trading, it's important to be aware of what's happening in the market and why, and how to respond to it. If you are going to re-enter the market, keep your stops tight, manage your profit locking targets conservatively, and be aware that further consolidation could be occurring in the market. Therefore, it's important to proceed with caution and only consider strong trade setups at good price levels. In trade grinding scenarios, I like to use the quote, "the second mouse gets the cheese." In other words, the first trade that you enter may not have been the one that was going to move with the market. It may be a failed move, and the second mouse gets the cheese. After the trap's been set, a new trade setup comes along, and can often end up being in a much easier trade going in your direction from the very beginning. If you jump back in too early, especially in the very short time frames like the 5-minute charts, it's possible that the counter move may not be over. You might be able to extract some pips out of the market with conservative profit locking targets, but if the price moves against you again, whether you profited or not, you should be patient and calibrate your new trade position again, especially after observing how price reacts at new levels as it continues its counter trend move. If the Profiteer HTF, the high time frame analysis indicator, changes the overall trend direction, the OTD, to bidirectional, then the trend may be over. However, if the OTD remains in the direction of the position you want to trade, it becomes a higher probability that you can enter the market safely at a new time. When you've let the market position fully unwind, the reward is that you are likely to experience a very easy and profitable trade as the market restarts its position in the direction of the overall trend. Okay, so here's an example of calibrating a trade position at a better price and entering the market at an optimal point. So you can see here a small winner to the downside, a small loser, and it doesn't matter whether these are trend trades or swing trades. The point is that you need to always calibrate, fine tune, get ready for the next trade. So small winner here, small loser here, and then a big winner here. So when calibrating, you want to select the type of trades in your positions very carefully. Choosing the type of trade can depend on the time frame that is being used to trade, but for most trades, you'll probably find that trend trades are the strongest and most prevalent market setup. Having said that, swing trade setups can also represent excellent entry points for the greater part of the overall move, particularly if there has been a noticeable market correction from the beginning of the trend's move. In other words, if the trend trade moves against you very early in the life of the new trend, you can often calibrate successfully for a swing trade if the position is still believed to be strong for the intended direction. So quite often, the swing trades that are closer to the inception of the trade can often provide good trade setups for a successful outcome. Okay, so here's an example of calibrating a buy trade position on the 15-minute time frame for the pound, and you can see here a small winner on the swing as well. This cluster of trades actually were a small loser, and then you had a big winner here that took you all the way up for the length of the move. Here's an example of calibrating a buy trade on the 1 hour time frame for the Kiwi. And you can see here, small loser. If you were trading down, then you may have got a small winner, but of course it is an overall direction of up. So you may have avoided these ones, and then there was a big consolidation period for these ones. So if you had gotten these, you may have even experienced a small loser here. Take a look at this spike over here. So you may have taken one of these trades and then immediately got stopped out and, go on your way complaining of what a system it is and so on. And then the next one's, a nice little winner even after a consolidation period, and then you get your big winner. So, again, I'm just trying to nail home the fact that you can't judge any system on just a small number of trades. You know you need to be a fighter. You need to be in there, and if you take a trade or two that don't eventuate in a positive outcome, there could be a big winner just around the corner. You need to have patience and be persistent to get in on those trade opportunities when they occur. So here's an example of calibrating a buy trade position on the 4 hour time frame for the pound. And you can see here again, had very minor small winners here, a small loser here, just really bought the top. A small loser here, which you hopefully wouldn't have gotten because you are in a upward market, and then you get your big winner again. And then even these ones were nice winners, and then you get more winners as time moves on. Even these may have just ended up being break even and then a small winner. So not every trade is a big winner. You will get big winners, but you need to be accepting that you're going to get small winners, a lot of small winners, and you're going to get some small losers. But it's the big winners that you really want to hang out for to get, and they can really positively affect your account balance. Okay, so let's look at a few sell examples. Here's an example of calibrating a sell trade position on the 15-minute on the dollar Swiss. And here you can see again a small loser here. This one was a nice little winner, although it wasn't a downward direction. We get a little loser here buying the top, and then if you were only selling this pair, then you would have resulted in a small loser here and then a big winner, and this one would have been a solid amount of pips for such a short time frame as well. And you could have caught these swings as well, just like we've gone through in another lesson with trend profiteering. But again, the point is small loser, big winner. You've got to hang out for those big winners. Here's an example of calibrating a sell trade on the 1 hour on the Euro Aussie. And again, you can see a small winner here, small loser, and then a big winner. Okay, this just occurs all the time. Here's an example of calibrating a sell trade on the 4 hour on the dollar yen. Here you can see small loser here. Nothing happened for quite some time, and this is on the 4 hour time frame. So days went by before you got another decent setup to the downside, and it so happened to be a big winner, and that's what what you're looking for. So I'm sure you already appreciate that trading with Trend Profiteer can generate very good results. However, you may see an improved win ratio with your account balance also improving as a consequence by using the tactics outlined in this lesson. Trade grinding leverages the power of calibration and probabilities by entering the market when the overall fundamentals in terms of the higher time frames are the same or very similar. As you incorporate trade grinding, you can start to better exploit overall trend moves. Therefore, I encourage you to implement trade grinding into your trading and potentially increase the pips you generate from major market moves, even when you experience losing trades. Obviously, they have to be valid. All of your criteria needs to be in place for a new trade setup, but just bear that in mind. You are playing probabilities at the end of the day. So it's just a matter of calibrating your trades and getting in at new trade opportunities in line with your original trade. Sometimes, if the indicators are pointing to a different direction, then that's the way you've got to do. Uh, that's the way you've got to trade. You've got to always trade with the market, not against it. So in closing, I suggest you use trade grinding whenever you can. Look forward to seeing you generate positive results with this style of trading. Again, please don't hesitate to participate in the forum, in the chat room, in our weekly webinars. And until next time, good trading, live well, and I'll see you soon.